We detected an unusual trade on Sweetgreen stock, ticker symbol SG. But here's what makes this even more interesting. Sweetgreen reports earnings very soon on November 6th after the market closes. And so in this video, we'll analyze this unusual option activity to find out if this wealthy investor is bullish and buying before earnings or bearish and selling. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, there was unusual option activity on November 4th around 12 p.m. in these January 15, 2027 options at the 5-strike calls. Now keep in mind, these are leap options that expire more than a year out. But just because they expire more than a year away, that does not necessarily mean we have to wait that long to profit. The fact that this investor put this trade on now means they believe they're getting a good entry price. And we can see here the price that they got, $3.30 for each of these contracts, hundreds of them. But if we dive deeper into the data, we can find out about how many contracts they traded. We can see here from the historical data on November 4th, the day they put this trade on, that for these January 15, 2027 options, at the 5-strike calls, we only had 604 open contracts. And so when we take a look at the new data now, for these same leap options that expired January 15, 2027, we can see here that at the 5-strike calls, we now have 5,700 open contracts, meaning there was at least 5,000 contracts being traded since we subtract the previously opened contracts of 600. And so we can calculate the cost of this trade. We have about 5,000 contracts that were traded, and they were being priced at about $330 each. And so this trade cost about $1.6 million. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of profit. In fact, the smaller, more selective trades that we share on our website have a lower risk and a higher probability of profit. And so if you want to get access to those lower risk trades with a higher probability of profit, go to our website. We'll put a link at the top here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, we still took this trade because it was still unusual and they were opening these trades. As you can see here at the 5-strike calls, our position here, POS, with the green color indicating a buy position. Because based on our analysis, this wealthy investor was buying these 5-strike calls for about $3.30 each, the same price as we saw on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below the zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, it's going long bullish on Sweetgreen stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Because of this, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $5, the stock needs to trade above $8.30 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We do not invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we shared on our website. We'll put a link to our website here where you can learn more strategies to increase your profits. Let us know in the comments, do you think Sweetgreen stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.